Good morning everybody, it is the 22nd of May. Hope everybody had a nice day yesterday. It's another quick hit review video. Wanted to get this one out early before the trading day really started. Here on the pound New Zealand we have a very nice breakout pattern. We've got a sore thumb move here, a swing in the market. We've got a very directional move. We've got the market adhering to this upper trend line, and we've got the market coiling or wedging. Minimum of 4 touches, 1, 2, 3, 4, 5, 6. Targets playing for that 127, so from our swing high to our swing low. Now we have already had the breakout, so before, if we can get a pullback before we hit those targets, we're looking for a pullback to around this area, then looking for a higher high, higher close candle, and a chance to ride that up to profits. Aussie dollar CAD. This was a trade I posted in last night's video, quick hit review video. We're still in trend continuation on this trade, so just to recap, what we've now had is this confirmed break below, close below. So structure level on it, that confirmed break below, close below. We are at this minor level of structure. Look left, there is nothing else. This is minor, and I would expect there to see a small reaction at this zone, but I would expect, because we've only just violated structure here with a good sized red candle, that there's a lot of selling pressure here, and we could just rally straight down to maybe at least 20 pips, or even we'll just rally all the way down to potentially our lower structure level just here. So let's drop to the 240. I did say that we've got again in the video last night, we've got our move lower, a pullback, which is the outside return. Anywhere in this zone you can look for a pullback into this zone and a chance to get short. What we've got here though is that we have got the lower low, lower close 240, and if we go ahead and highlight the wicks and drop down to the 60, we can look at a first chance entry. But when we look at the 60, we now have this internal level of structure right here. And I did say again in the video, pay attention to this. We had momentum candle followed by indecision at this internal structure level. This could be a turning point. We drop to the 15 and we can see a very nice trend that's set up here. We had a move lower, a pullback, a move lower, a pullback, a move lower. Target ones were hit if you were playing for a retest of the lows, but I did point this out. This was a key level, a swing in the market. We can look for double tops in the wicks, giving us good entries with conservative stops, or a good place to hide stops, and that potential to ride it down, giving us a high probability trade. And what we do is, because the trend is here on the 15, we're allowed to drop one time frame lower to the 5 and look for that double top. And right here was that double top. So we had one test, two test. The market came up, validated the double top. The RSI went overbought with divergence. If I can select it, we went overbought at about 85. Clarify this is that these wicks here, we technically held this structure level because we closed within the wicks, and as you can see from there, that valid double top went down to play for a retest of the lows. Now if we just go back to the 15, I'm expecting a continuation lower here, because look at what we're doing. We are making lower highs. So this was our high, a lower high, lower high, and this was our lows. Obviously we're holding that level, but right now we could be putting in a lower high. Okay, imagine this is, we're knocking on a door, one bang, two bang, third bang, we may break through. In terms of targets, you can look at various things. You can look at an inversion, maybe look for that 1618, maybe play for a psychological number, maybe trail your stop loss down on every outside return, or again simply just play for that extension. Maybe look at the 60, the 240 should I say, look at your very lows here. I think that is certainly achievable. Just bear in mind we do have to break past that psychological number. The other thing is the euro yen. This was another trade I talked about last night. It's an aggressive head and shoulders AB equals CD pattern that I'm in. And I did talk about a 15-minute potential trend continuation, which did not come off, but is now giving us another opportunity. So just to recap, AB equals CD pattern. We've already had our higher high, higher close. Looking for that 38.2. We haven't hit it, but we have had the higher high, higher close. So it should be relatively plain sailing from our entry, if we get a good entry, up to our targets. And there's still up for grabs here around 65 pips. Let's go to the 240. We have a head and shoulders here. This is the left shoulder, this is the head. We've had a it's actually on the 60. Let me go to the 60. Here on the 60, this is a confirmed break above close above our outside return. This is the key level of structure right here I would be paying attention to. Going to highlight the wicks. Okay, if we come into this zone like we're doing now, this is a high probability. We've got decent level of structure here to get along. Not only that, we have a sore thumb move in the market. We have a directional move. We can draw a trend line on the closes of the candles. We can duplicate it. We can move it down. We can say 1, 2, 3, 4. If we get our fourth test here and an entry signal, you have a flag pattern, a very valid flag pattern, which is trend continuation. Higher time frame confirmation, again the AB equals CD pattern, the head and shoulders, play for that 127 or even 38.2, and just look at this, what we've got here. Okay, our targets, mine are at the 38.2, your targets here are at that 127. Personally, I would play just before this 124 psychological number. Very high probability trade here, everything stacking up. Get your entry here on that flag pattern. We also have 1 second, we have the dollar yen. I forgot to put this on the video last night. I had an alert in the night to get involved with this trade. We have an AB equals CD pattern on the lower time frame. So dailies, first of all, we have violated this structure level. We're making our way up. Where we're coming up to, I have no idea. Potentially this level here, potentially this level. Down to the 240. We're moving very nicely here. Look at what we're doing. New high, outside return, new high, outside return, new high, outside return, new high. Look for a pullback. Look for a pullback and a chance to get long here in the wicks. Okay, targets up here at the closes of the candles. There is no structure in between this and those targets. It should be relatively plain sailing, or as plain as you can get whenever we trade Forex. Drop down to the 60. Okay, what we got setting up? We have a swing. We have a directional move. We have the market. This touch here did not touch that touch, so we can look for a potential flag pattern. Minimum 4 touches, 1, 2, 3, 4. We have come down into that zone now, but we have not tested the outside return. See if we can maybe come back for another test and then another test. Get your entry signal, play for a 127, fib on from our swing high to our swing low. Play for that 127. Where does that 127 come in? It comes in just before our structure level. Not only that, drop down to the 15. We have a lovely AB equals CD pattern, which I have not been able to get my entry for. So from our A to B, we go ahead and duplicate it up there. We throw a structure level on. You can see price came into that zone for one test. If we look at the RSI, we have the RSI that went massively overbought here at 95. Divergence, okay. I was waiting for a double top, but there's more. Let's look left. We have, and I'm just going to go out to the 60 for this. because you can take this trade on the 60. We have just this level here, a double test, a small test here, a little reaction here, not a major level, okay, but nevertheless we had the RSI massively oversold. Not only that, we have good fib confluence, we have a 1618 inversion. My highest probability ABCD patterns are when we have a 1618 inversion and a 1414 extension. These are the fibs I tested. These were the ones that provided the highest win rate. And look at that, both of those fibs came in right in that zone. So if you can get an entry, this is a fibs based pattern. You want to be looking for fibs based targets, swing low to swing high. Look for a 38.2. Because of that flag pattern that's setting up, if that is valid for you, I would only be looking for targets down here at the 38.2. But look at what we're doing. We're putting in a small 3-point move. 1, 2, 3. If we can get a pullback here, we're in trend. Look anywhere in the outside return. Look to ride this down. I would trade it based off the 15. Now here on the 15, we have not yet had the confirmed breakout. So if you do get a pullback, maybe we get a small double top up here as a conservative entry. There is still 30 pips up for grabs with that trading opportunity. The last trade I want to run through is the New Zealand dollar. We have a trend continuation opportunity. Let's go out to the dailies, clear this off. Okay, structure level on at our most recent low, which was yesterday. We have had a confirmed break below, close below. However, we are within the wicks here, we do have this lower level of structure. My opinion is that we are going to come down to this level, but just be wary. We are at these two levels right now, and we are at 6,500 flat. Let's go down to the 240. We see a different picture. We have a move lower, a pullback. This is a big outside return. You can look for potentially a pullback and a chance to get short. Pay attention to this. We had a move lower, and then the market is dribbling down sideways. Now we don't have any RSI confirmation. This pattern can break out to the downside, or it can break out to the upside. If it was going to break to the upside, if it was a tradable opportunity, we needed the RSI confirmation, and we don't have it. So right now I'm looking that this could drop, and there is a little bit more confirmation. Whether or not it's good enough to trade, well, it isn't for me just yet, but we've got to move lower, and then we've got this consolidation zone just here like this, and we have broken below it. Let's drop to the 15, and here on the 15 you can see, and I'm actually going to draw out the trend on the 15. This is the move lower here, believe it or not. This is the outside return. This is the new structure low. This is the outside return. This is the new structure low. This means that this just here is the outside return. It's very small, which means if we get a pullback, you've got small stops, and you can look at riding this down for potentially those bigger targets. If you feel the market could come down lower to maybe the lows down here, there's maybe a good 25 pips up for grabs, or even secondary targets down here. Okay, quick hit video done.